The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, everyone, to a Federal Reserve Chairman speaking in the big city day. And I'm sure she's going to tell us that interest rates are going to be going higher someday. She just doesn't know when. We've got an interesting situation in silver right now. We're sitting just about right at the 61% retracement of this move over the last week. You know, it looked like a short up there at 1560, and now it's coming down here. We'll see if it's going to stop here or go even a little bit lower. We'll have to wait and see, but that's neither here nor there. We'll just watch that as it transpires. I had a really interesting program planned for today, and those son of a guns at Netflix split their stock, and that changed the whole promise of what was I wanted to do. So not much I can do about that. Now, what I wanted to do is I wanted to go through a couple of stocks here. First of all, let's just do what I think is happening. I know it don't mean very much to anybody else but me, but I got to be the one that does this, so why not do it? This is the stock market. The New York Stock Exchange Index is almost at the 61% retracement. I believe we'll probably get there pretty soon, but we've got, you know, monster moves happening in this IBB. You know, everybody talks about it, everybody's watching it, and so that gives you an idea of the power and everything that's going on in some of these markets. I want to go over a couple of these stocks here just to show you what I'm looking at from a technical standpoint, and that, believe me, that's all it is, folks. It's just a technical standpoint. We have a big cycle day today. We already know that. So we'll take a look at the first one. I'm going to go over three of them. First, we're going to do the one that I don't know if you folks know this, but here in Tucson, we have the St. John Bosco Widows and Orphans and Urchins group, and I happen to be a member of the financial committee on that, and we had a meeting yesterday, and Sister Mary Perpetual, who is in charge of the finance committee, along with I happen to be a member of that committee, we were looking at possible investments, and so I brought to their attention one that I'm looking at right here. Now, this is a widows and orphans fund, so we've got to be really careful about what we're doing here. So the main thing here is risk control. So what we're going to do now here is we're going to be looking at the Starbucks. This is a weekly chart of Starbucks, and folks, that has gapped up this week. We've left a gap on Starbucks on the weekly basis. This is Wednesday. If between now and Friday, Wednesday, Thursday, and Friday, if we close above 55, but not below 54.74, if we leave in other words, if we close in the lower part of this range today, this to me is a very, very low risk trade. We've got a situation where you've got a perfect ABCD. You've got the time up between 2012 and 2013, absolutely equal, 66 weeks. And we have the same thing in 2014 to 2015, 66 weeks. So we have perfect harmony, we have a big gap up, and we have all the things, you know, necessary, you know, to really make this thing a really interesting thing. Now, on the second part of this, if you want to put in the greed factor, you can see what's going on about the price of coffee. You know, the price of coffee has been going down. And what do? They raise their price of coffee by 8%. Now, I'm sure that the research things that are necessary to use copper as a cancer cure, whatever it happens to be, you know, but they're just being greedy. That's just my opinion. And they should be. Why not? They got a great product. Everybody wants to buy it, so why not sell it to people that are willing to pay for it? But this is one of these things that's got everything set up for it that you could possibly ask for. It'll be a very, very low risk trade, because if it does close in the lower part of this range here, down around 75 cents from where we are right now, and there's still a gap there, that means that if it gaps down on Monday, that would be a island reversal, and that is the most bearish of all the patterns on the candlestick is the island reversal. First of all, it's very, very rare. That's one thing. The other thing is that, you know, this is not a research company, so they're not going to come out with a well, maybe they will. They might. I don't think they're going to come out with a cancer cure or a cure for Alzheimer's over the next, 48 hours or how many days, 3 days or so, but we'll wait and see. This is a really nice completed pattern. So that's one of the ones. I was doing the same thing with Netflix, and Netflix has made over the last 6 days, has made an incredible 3-drive to a top pattern on the hourly charts. Unfortunately, because they split the stock, my program, because I'm not a stock trader, doesn't adjust for the splits for a few days, and so I don't have that data, off the top of my head. Now, I wanted to go over another one of the big ones. We've already discussed Apple a lot, but let's just take a look at Amgen here, because we have the same situation occurring in Amgen. Let me do it 2 ways. First of all, I'm going to do it on the weekly basis. I'm going to show you where we are on the Amgen. These are the big ones, folks. And remember, these are the NASDAQ stocks. These stocks are all in the triple digits, and the NASDAQ is cap weighted. Okay, so you get the 8 or 10 of those big ones: Google, Netflix, Amazon. And they'll just they can take this thing to new high ground without any trouble at all. So you're seeing the same thing. We had a weekly breakout here. We gapped up this week on Monday, and we're continuing higher. Now, if we go to the daily chart, you're going to see something really interesting here. Let's see if I can do this correctly. Yeah, this is what I want to show you, and give me 1 second here. I'll get it right here. There we go. This is what it's been doing ever since the beginning here. But what's interesting here, it'll probably be up today. We should hit about, we might hit 476 today. I don't know if we will or not, but we'll see. But if we take a look here at the Amazon, you see we broke away on Monday. We broke away on Tuesday. We left 2 gaps there. We left a gap on Monday. Left a gap on Friday, and we left a gap on Monday. What is today? Today's Wednesday, isn't it? Yeah, Monday, Tuesday. So we've left 2 gaps in here, breaking away to new high ground. You can see there's all kinds of gaps. Nobody wanted this stock at 286 when we were making a 61% retracement at a triple bottom. Nobody wanted that stock. Nobody at all. And now at 467 or whatever it is, everybody wants it. So just be real careful up here. This is I think it's an exhaustion move, but we'll have to wait and see. The IBB, I have no idea where it's going, other than it's just, it's in a parabolic move, and it's been that way for some time, and it's the one that's been, pulling the market, a lot higher. So keep in mind that that's what we're looking at when we're watching these things. So we have the new moon today. We have some really strong Bradley stuff that comes in today too. Whether this will affect the markets with Yellen speaking or not, remains to be seen. But that's neither here nor there. We'll just have to wait and see, what happens with the rest of these things that are going on with these markets, and then we will go from there. Okay, now the next thing we wanted to take off here is, let's just take a quick look here where we are. Alrighty, 1 second. I gotta fix something here to make sure I don't mess up an order. I've got an order setting in there to do something. Okay, we've looked at Starbucks. Okay, we've looked at Amgen, and now the next one I can't do Netflix, as I told you before. Now the next one I want you to look at is Nike. We're going to put Nike up here. Now this is not a NASDAQ stock, but it's still one of the big ones. And then after that, we're going to look at the reason why I'm doing this is I'm trying to figure out, why this market. Well, what do I know? I don't know where it's going. Anyway, this is the Nike stock. I'm just trying to figure out, why everybody's buying this stuff, and we'll see what's going on. Now you can see Nike is the same thing. We had a breakaway gap here on Monday, and so we're up into this area here. Whether it's going to stop or not, I'm not sure, but nobody else is either. But I do want to show you this on the 4-hour chart, because we are making a really nice 3-drive to a pattern, a 3-drive to a top pattern in Nike, and it's also, it left that the big gap that we had with the earnings when it went from 106 to 110. That was back on the 25th of June. And so we've just got some, parabolic. All I know, folks, is parabolic moves end badly. We see that in China. We see it everywhere. So it's not a big thing to be worried about, I don't think. But anyway, keep in mind that we're having a big sell-off now in the gold and the silver, which we're expecting. If you remember, we'll just switch over to, we're going to have Rich Anderson on here at the break, and he'll give us some good information, and we'll see where we stand, because we're getting really close to our buy zones here in the gold, and we'll see if this is going to be the case or not. And so we'll see here where we are. I'm looking at around 1136 is what I'm looking at, and we'll wait and see if this is going to be the one that is going to take a look at this, and we'll be watching it kind of closely here, and we'll see what's going on. Okay, now there was some interesting news that came out of China over last night. They had their production number, their GDP number, come out, and it was a 7% growth, and exports were at 10%. Now, this is really good, because they did this in the face of a situation where you've got the commodity prices lower than we've been in the last year and a half. I mean, they've been going down in everything. The whole thing that we've been watching here is nothing more than one thing after another, pointing to lower prices, and yet they're reporting that things are really good over there. Well, they might be really good over there, but right now it's telling us that it's certainly not indicative of what's happening. Now, what happened with our market is when that figure came out, our market rallied, and we took out the previous day's high in the overnight market. But the Chinese market, it was down. It was down 4%, and so that even the Chinese don't believe their numbers. So I don't know what the information is coming out of there, but we'll just have to keep in mind that this is what's going on, and we'll just have to do one thing or the other and figure out what's going on. Okay, now we hit some key levels yesterday. The Dow Jones made the 786, the S&P made the 786, the Nasdaq went quite a bit above the 786. That came in, in fact, it went about 20 points above it. So we'll see what happens. Whether the thing with Yellen means anything or not, I'm not really sure. But we'll just have to let things go and see what happens with that. Okay. Next one we have is the VIX index. It's totally broken down. The market's going to go up forever. Everybody knows that. So we should all just hang on and wait and see what happens. And let me put up the VIX. You'll see that this thing just really broke down badly, and we'll see what the next thing is here. And the dollar is strengthening, which is good, I guess. Okay, we'll take a little break here, and we'll see what happens next. Okay, it's a big tip.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to have Rich on in a few minutes here. I did want to, I posted into Tiger TV here the picture of the advanced decline line over the last few days, and you don't have to be a rocket scientist to see that it's made an ABCD pattern when it went into that new high ground. And then the last several days, even though the market has been really strong, the advanced decline line is showing that more people are coming in selling stock. Probably doesn't mean very much this time, but given the fact that everybody wants to own stock, so we'll see what's going on here. Without too much trouble. You know, we're almost ready to have a major funeral over here in the precious metals. You know, gold gets much below 1130, and it's going to have a triple-digit. It's going to have a triple-digit target down around 960. It looks like. If that's the case, you got everybody bearish that stuff, so that's one thing that could give it a little bit of a bounce. There's some cycles that are interesting that are going on in both silver and gold. They're just 10-week cycles. Whether they're going to hold or not, you know, we'll wait and see. The main thing is the price level down here that we're watching here in the gold at 1035. We're $10 away. Silver's gone through the 61% retracement. The only other number down there is 1488, which is the 786 retracement. Now, yesterday I spoke to an old friend of mine who's one of the, he still is, he's one of the biggest coin dealers in Southern California. He does large quantity transactions only, and even though the prices are going lower in gold and silver, the spreads are widening. He's never seen this before. And the reason for that is it's harder to get some of this stuff. That's the only thing he can figure out. Usually the spread on the silver rounds that they buy is about $1.50, and that's moved out to $3. And the spread on the gold has also been moving quite a bit. So it's real interesting what's happened here in the market. He doesn't know what it means. He says, but the bullion itself is moving well. He said coins are moving well, but to buy big quantities, it's really difficult. So that's the main thing. As far as a retail trade, he said that there basically is none anymore. He said it's probably 10% it was from where it was, way back in the 70s when gold was on its way to 860 an ounce. So it's a totally different type of market. But the large quantities, he said, were very hard to get a hold of. So we'll see if that means anything or not. But we are making new lows today in gold. Almost. We haven't taken out the 1135, the 1140 yet, but we're very close. I don't see why we're not going to. So we'll take a look and see what happens with that. Now the U.S. dollar here is getting a little bit of a kick because of the fact that we've had a lot of selling here in the euro here over the past 48 hours. We're breaking down now below the 786 in the euro, and it looks like that's heading down towards the old low that we made a few weeks ago at the 108.50. That was during the Greek crisis, and God only knows what's going on with that Greek crisis, and she's not saying too much about it, so we'll have to wait and see. I guess they've got some type of a vote, but they're between a rock and a hard place, and usually the rock wins. So we'll see what goes on here. Okay, now getting back, someone asked a question about the market, how these stocks can be affected. If you got these very large stocks like we've talked about, especially these NASDAQ stocks, the NASDAQ is cap weighted. In other words, the price of the stock gives more weight than a stock that's selling for $4 a share. He doesn't get as much weight as the one they get with the that's trading for $200 or $300 or even $1,000. Like Priceline and Google is 500. We got some real expensive stocks up in here, folks. We'll just have to wait and see what happens here. And we want to take a quick look here at crude oil because we've got a lot of news coming out on crude with the Iranian thing. We've been in a bear market in crude for quite some time. We had a 786 rally yesterday, after the move, and now it's selling off probably in conjunction to what's going on with the precious metals, because when they're selling, it goes from one thing to another, to get to these spots of where you want to be. In other words, all these commodities coming down at once. Then the liquidation, it's margin call. That's why it's hard to believe these figures from China, because with these commodity prices coming down, give me a break. They had to be buying this stuff pretty cheap. But nobody's buying it. That's the problem. Okay, we're going to take a little break here. When we come back, we're going to have Rich Anderson of Anderson Capital Management on.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I've been unable, well, not unable to, but Rich is just absolutely swamped today. So he's, as you can imagine, with some of these things jumping around like they are. So we're going to hold off on that with him, and we'll see what's going on, with that, and we'll go from there to see what's going on with some of the stuff. Okay, now. The next thing we want to talk about here is we've got a situation here where we've got a pretty good stock market today. The NASDAQ is rallying again. The Dow's up about 15. We're still moving higher, as they all should go higher. We'll wait and see. Gold has been down 10. We're only down 7 right now, so we're going to have a pretty good indication here of what's going on pretty soon, and then we'll move on to the next one right here. I wanted to show you a pattern that is still valid. It's a pattern in the Canadian dollar versus the U.S. dollar. It's a daily chart, so it's we've had a little bit of a correction, and now we've done something unusual here. Well, not unusual for us because we watch this all the time, but we've made a higher high than yesterday by just a little bit. So that means the market is still trying to get up into this area and to see if it gets to that area right in here. Regarding Rich Anderson, as you know, he does a huge amount of hedging business for himself and then also for other people. He's really been in tune with some of the big players in the business. Several of the market wizards guys, Jeff Silverman and a few others. What's his name? Siegel. I can't even think of Mr. Joe Siegel. I mean, these guys are, legends in the business, and they're close friends of Rich, and they talk a lot, and they do a lot of business together. And so when he gets busy like this, he's unable to come on, and just unfortunate that we were planning to do it today. I'll try to get him on later on. I've got a guest on Friday, Bill Koval from Trend Analytics will be on, and then tomorrow we're going to have Bill Meridian is going to be back from Cycles Research, to talk to this. So anyway, keep an eye on this Canadian dollar because it's going to have a lot of resistance, I think, somewhere between this 127.80 and some of these other areas that are going on through here. So we'll just keep an eye on this, and we'll see what's going on. Now, I wanted to point out something that's interesting here about the September corn contract. I just want to give you just a rough idea of what's going on here. This is a long-term daily chart on corn, September corn, which is our cash corn. This is old crop. This is in the bins. And as you can see, the other day, yesterday, we made a perfect 61% retracement to the exact number at 443 a bushel. That was very close to what it was in the December contract, which is the old crop corn. It went above it just a little bit. And so we did have a 20-cent sell-off, which has been our largest sell-off since this whole thing started. And so we're looking at a situation now where, we've had a sort of a 2-day correction. We'll see what happens with this. I spoke with Rich yesterday, and he had his contacts had gone through Kansas, Iowa, Illinois, Minnesota, and the corn crop is in really bad shape. It's really hurting. It's pretty much made now, but the bean crop is the one that's going to be important because from the 15th of July to the 15th of August is the tasseling time when the pods are made for the beans, when they make the oil and the meal inside those little bean pods. And so that's a interesting thing that we'll be watching right here. So anyway, we'll just keep an eye on this because there's a potential here for the for corn to be at a pretty good high. Now the reason for that is corn has a tendency to top early in July. And if you go back and you look at from 2004, let's just do that right now and just show you the similarities. If we go back and look at what happened in 2015, hold on one second here, and give me a second here. We'll see that these were just about perfectly equal moves, and you'll see that they were pretty much going on to the same thing. So that's what we're watching here in the corn, and we're also watching the same thing in beans. We talked about that yesterday where November beans had made a higher high by a penny or two, and the July, which is the old crop, could not make a higher high. So that's another indication of what's happening with some of these things that are going on. Okay, now let's get back to the stock market. Let me take a look here at IBB. I've got 3 requests about IBB. Never traded it. I look at it, but I know it's what do you call it? Give me a break here. It's the investment business. Oh boy, this thing is really strong. Holy cow! Another gap up today. Wow, this is everybody wants it now. Boy, this is. Please let me come to the party. Wow, this is a really big one. There it is. You can see. Well, let's just do that. Well, let's do it both ways. We'll do it first. We'll do it on the daily, and then we will do it on the weekly. And you can see that this is a huge bull market. And in fact, wow, we're at the 1.618 expansion up here at 392. Boy, pay attention up here. This is going to be real interesting because we are. the 1.618 expansion on the long-term weekly comes in at 393, and we're trading at 394. So this is pretty close to where we are. We gapped up. That's the whole key, is where we're going to close today, or close this week, because this market could literally just take off and run like a scalded duck. And scalded ducks have a tendency to run very, very fast. So be really careful in here. These are very parabolic moves in the same way that they that they started. They go up and they go down. We already know that Newton's law is usually pretty much the same. We've had several questions about Apple. I don't see a lot of difference in Apple. We went down into that major support in Apple, and I wish I could show you Netflix, because that was the one that was most interesting to me, because it had such an incredible 3-drive pattern up at that $730 level, and you'll see here that we're having a little bit of a bounce here in the Apple, and we are hasn't done very much at all compared to the rest of the stuff, and it's basically these it's basically these high these triple-digit ones, the ones that are selling for $100, $200, $300, $400, $1,000. Those are the ones that are, really kicking this NASDAQ in the rear end. And when the NASDAQ moves, the rest of the model follows along. Now, I need to check something here, folks. I want to see how the New York Stock Exchange Index, if it's made the 61, hasn't opened yet. Takes another 3 minutes yet, but I want to see that New York Stock Exchange if it hits the 61% retracement, and then I also wanted to show you the cash S&P, because this is also coming up now. What's dangerous about this? It's down just a little bit on the day here. We went up to the 786 yesterday, and that as we hit the S&P, we've got this big gap here from the other day when the Greek thing was finally done, and we'll see if that's going to be the case or not. But we've been in this is basically the 7th day of the rally. We have a key astro date. We got the new moon, and we've got the Bradley things that are occurring, so we'll wait and see and if this is happening. Folks, I have to say something here. This power that we had with these gaps and everything coming out of here, it didn't surprise me that it gapped up, but what did surprise me is how far the NASDAQ went. The others have done pretty much what, not unexpected. I mean, they're stronger than I would thought they would be, but they're still in the bailiwick of a bear market. That's the way I look at it, and I guess I'm wrong. I mean, if they can't get this market down on a Chinese crash and everything else, then maybe it's going to go up, and we'll have to wait and see if that's the case, and we'll have to wait and see what's going on now. We got a caller from Robert from Lexington. Can I help you, Robert?
Yes, sir. I hear your guest didn't show up today. I'm wondering if I could be your guest for a little bit.
Well, I won't be able to get the check to you right away, Robert, but fire away. What can I do for you, my friend? Tell me what's on your mind.
Well, I wanted to take a look at an astrological aspect that's pretty powerful in the market, and we have it coming up at the end of this month. And I wanted to look at the S&P 500 over 20 years and kind of point out the major turns that it has been a part of.
Can you post that into the Tiger TV for the folks? Are you able to do that?
No, unfortunately, I'm not. I can watch.
Okay, I have a 20-year chart. Just a second. I can bring that up without any trouble at all. Give me a second here. I think I have a 20-year chart. Oh, I don't have it anymore. Oh, I lost it. But fire away. Just tell us what you're seeing here, and then what I'll do is review this, and I'll bring it on the show for tomorrow. I'll bring the thing up and remember what you have to say. But tell us what you're seeing.
All right, sounds great. I'm going to start with 1999, right before the Y2K. We had Venus go retrograde, and Venus goes retrograde every 18 months. Or just a little bit longer than every 18 months. So right before the year 2000, Venus went retrograde and the market made a high. And then it sold off into Venus retrograde. And then it went back up. And, of course, the Fed was pumping money. So it went higher than I expect it would have had not the Fed been pumping money into it. And then thereafter, of course, it went down into the lows of 2000 and what was that, 2002 low in September. And the precise day of the low, Venus went retrograde again.
Yep,
So in March.
I agree with you. I think that's very important. We've had Norm Winsky on, from Astrotrans, and he's really weights the what do you call it? The retrograde motions of these planets, and those come in, I believe, on the 28th of July. I think we have Venus going retrograde, and we also have Uranus going retrograde at the same time. Is that correct?
Yes, sir. I believe so.
Yes.
And also we have Mercury combust the sun on the 24th.
Oh, that's combust. Yeah, that's another big one that'll be really interesting.
Yeah, I mean, it's good for calling the turns. You showed me that one, and I was thinking that we're going to rally up into that and then turn on the Mercury combust and go down into, well, let me just go back to the dates here. So anyway, it made that low in 2002, late 2002, and then it rallied up from that bottom to another high through a couple of more Venus retrogrades that didn't have too much major effect on the market. And then you had the 2007 high, and you had a double top, which was each side of that double top was on either side of Venus retrograde. Before it started, and the other top of that double top was just after it started, and that marked the high. And then we went down and made the exact low on the exact day of Venus retrograde again in March of 2009. We all remember that. That's fairly recent history. And then we've had 3 Venus retrograde periods since then, but really no major effect. Of course, when the Fed's pumping $3.5 trillion into the market during that time frame, what do you expect? But here we are with another one about to occur, and the Fed's not pumping that money. And to me, we're going to rise up into maybe make a new high in the next week or two, and then that'll be it. We'll sell off into this Venus retrograde, maybe have a double top like we did way back when in, what was that, 2007, and then I think that's it. I think we're going down for the next 2 to 3 years or so.
Well, that I agree with you. I'm not sure of the timing, but I think we're closer to a top than we are a bottom. That's the way I see it. But whether that's going to be the case or not, we'll have to wait and see. But it's going to be certainly something to watch. I'll have another chart tomorrow going back longer term to try to show some of those spots that you talked about. But this is
I have one more question for you.
Sure.
You have some software or aware of some software that kind of ties the astrological stuff with actual financial markets.
Oh, yes, Alfie Lavoie, Air Software, AIR, Air Software, Alfie Lavoie. His titanium program, I think it runs, it's around 4,000, I believe. Maybe it's a little more, but it does everything. It has all the data going back over 100 and some years. It has all the astrological aspects. No matter what you ask it, it can answer it. It's got everything in there. It took him years to build it, but that's what we used to write our book. When Shane Smolian helped me, well, Shane did the book. I basically, watched his development of it, but, it basically does all those things, and, it still comes out to probabilities, Robert. That's the main thing. But the Air software does do that. All you have to do is just go online and look for Air software, and you'll see it. You can give Alfie a call. He's a really nice guy. His wife works with him, Caroline, and so they can help you to see if you have an interest in it. But it'll do all the lunar things. It'll do everything. I mean, there's nothing that it won't do. Listen, thanks for calling in, my friend. Hey, stay with us. Stay with us for just a few more minutes, okay?
Okay.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back with Robert. Are you still there?
Yes, sir.
Okay, now I'm going to do this long-term chart tomorrow, and I'll post it into Tiger TV so we can take a look at it. But I think the one chart that is, to me, is the most troubling of all, and that's this chart that we have on volatility. The fact that we've had, the smallest volatility forever. I mean, we never had any volatility reduced like this, and as you can see, that we've been in this thing since 2012, so we're in the third year of it. And if you go back and look historically, and this covers the time frame that you're looking at, 1995, through where we are now, we're looking at over that 20-year period, and we're in the area, and we have that 1, 2, 3, 4, 5 expanding triangle happening also. So we'll wait and see. The key figure for me to watch by Robert is if the S&P makes a new high, then I'm going to have to throw all these books out and go back to using moving averages. So we'll see if that happens.
Oh, I think this Venus retrograde says that, it's going to make that that high and do a double top, and that'll be it. I think we're right at the end of this run here.
Well, we're not too far away, that's for sure. It doesn't take very much to get that thing moving, because it certainly goes when it wants to. We made new highs now in the NASDAQ, and we got the Dow still up on the day, the S&P up a bit. So this should be a real interesting day before it's all over. So I want to thank you for calling in, and it's all good information that you have. And I am going to do some more research on those retrograde motions, especially when two planets, come together at the same time. I think it's very important.
Yes, sir.
Thank you for calling in, my friend. I appreciate it.
Have a great week.
You bet. Okay, folks, we've got the New York Stock Exchange Index is still slightly down on the day. It hasn't taken out the previous day's high. It's very, very close to the 61% retracement. But frankly, with all the thrust that we're having, it's going back, quite a ways to. In other words, you have to respect this power that's come out of here from that July 5th low, and of course, it's 10 days ago, and now that's what we're watching here. So anyway, we'll take a break here and let you folks go on to the next guest and the next speaker, and live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.